Next one is Vidak Rajovic. He's a CTO of Kogna Tech. Vidak explores the generative AI in revolutionizing global taxation for multinational corporation. His session showcases AI-powered ETL models, processes designed for compliance with GAAP and IFRS standards, offering the live demonstration of Kogna. Innovative tax management solutions. Tax professionals and tech enthusiasts alike will discover how AI enhances efficiency, compliance, and strategic decision-making in increasingly complex regulatory space landscape.
Boom.
Thank you.
All right, sweet, here we go. Is the sound okay? Seemingly okay. Oh, did it jump down? Let me see if I can get this guy. There we go. All right. Yeah, firstly, thank you everybody for attending. Thank you also, George, for setting this up, giving us the opportunity to be here. Before we really get the wheels turning, I'd like to introduce myself. I'd like to introduce Kogna, so you have an idea of who you're going to be listening to for the next couple of minutes. My name is Vidak. I am the current co-founder and CTO of Kogna. I have been spending the last couple of years working intensely inside of the data and analytics space. And without going too deep into that, there's one thing that fascinates me. All right, can I see this guy falls off a little bit here? Just a second. There we go. All right, let's try. If it goes completely wrong, I'll just try to speak super loudly and see if that works. There's one thing that fascinates me immensely, and that is what happens when you look at the best technology and software and just general tech that exists, and then you go inside of a domain, and then you see how do we solve whatever problem exists in this domain with the best tech possible. And then, as luck would have it, at a tech conference similar to this one, I ran into the gentleman you can see here, Hans Kleinsman. He's actually sitting there with his orange scarf. There we go. And I don't want to give Hans necessarily too many flowers, but Hans is an absolute force when it comes to global taxation in any adjacent field. So we spoke, and we quickly realized there's something very special we can do here. And I know that the tagline, we're here to revolutionize whatever, can seem a little bit intense, but that is truly what we are here to do. It's not incremental improvements, even though that's completely fine. It's we really want to change the way that these large multinationals work with global taxation. How do we do that? I think a very classic way of explaining this is you have this nice Venn diagram that we all know, and in one side you have global taxation as the domain, and then the other side you have this slightly generic state-of-the-art tech. The idea is what happens when you dive into a domain, you really understand the problems deeply, and here it's very much through the virtue of Hans, and then you look at the landscape and say, how do we take the best tech that there is to solve this problem? That's basically what we're trying to do. And now you might go, okay, you know what Kogna is, you know who I am, why am I here? I think this is a very legitimate thing to understand the motivation of the speaker, so it's easier to gauge what am I going to get out of this presentation. It's actually a little bit simple. I'm a tiny bit frustrated. Why am I frustrated? And maybe you've seen this article. It was quite nice by a guy called David Kahn. He has a catchy title, AI's $200 billion question. We don't need to go into the math of it, even though it's super simple, back of the napkin math, but his entire point is there are huge investments made into AI. Whenever you, ideally as a company, make an investment into any kind of technology, you want to see a return on that investment. With AI, there's just a giant gap. We see the investment, we do not see the revenue. He did this article in 2023. He updates it in 2024. Literally just going, the gap is even bigger now than it was last year. And so really, maybe that's all my frustration is. And it's not that we have huge investments into AI. I think it's unbelievable that the scaling laws somehow continue to apply. That's very cool. But it's, where's the revenue? Like, where's the real applications of AI that create value, that extend beyond just this gimmicky thing that kind of impresses people, but it doesn't actually really do what we want? So if we go back to this simple Venn diagram now made generic with a domain and then Gen AI, perhaps all that's really happening is we're just in the infancy phase. The two circles are yet to overlap. And so really what I'm here to do is I'm going to give you an example of how we do that in Kogna. How do we take a domain as global taxation and apply the best tech, including, I say it's Gen AI, but for us specifically it's a language model, no images or sound. But how do we use that to solve a specific problem? Nice. So what are we going to do today? It's actually very simple. We'll try to do something which I don't know if it's possible, but we'll try. We're going to do two things, very simple. The first thing is it's really an invitation to you, everybody in the audience, to put on a global tax manager hat. The first thing that I'm going to do is I'm going to take a specific problem/process inside of the world of global taxation, go so detailed that you will hopefully be able to literally understand that if we were to sit Monday morning behind your desk and solve this, you would understand it well enough that you would have an idea of how you would actually do that. So we're going to go really deep and really get our fingers into the mud, so to speak. And then on the other side of that is, of course, once you understand the problem, then looking at a solution makes much more sense. So that's really what we're going to do. So what's going to be the problem/process that we will be looking at? It is GAAP and IFRS. Just out of curiosity, does anybody know what GAAP or IFRS is? Oh my God, we do have, it would be fun. Oh, hell yeah, fantastic. This is going to be fun. You can judge my explanation of this process, then this is going to be fun for you guys. I also enjoy we had the Kogna team doing, it would be fun if they didn't, that would be hilarious. Before we dive into this, just to get some fundamentals straight, and also just to re-emphasize, I really want to go deep here and try to make sure we all understand what this thing is. A very important thing underpinning even understanding GAAP and IFRS is, of course, accounting. We've all heard that fleeting, passingly. Just to make sure we're all completely aligned here, definition-wise, financial accounting fundamentally is just about one thing. It's just about communicating the financial position of a company. That's it. It's financial information, the financial position of a company. Now, there are tons of rules and regulations you have to adhere to for accounting that we need to follow. And I think a really fun way of trying to explain the relevancy of accounting more than just going there's credits and debits and somehow you need to reconcile is to ask simple questions that kind of showcase how you would solve problems specifically with accounting. An easy example is imagine that you have your own company, and let's say you sell hats of all examples, and what happens if you sell literally everything your company has? Do you actually have anything on the other side of that? It's a classic assets versus liabilities question. Another question that's really funny is, can I ask you, sorry to point you out specifically here, do you have your own company? Probably not. Maybe you do? You kind of do. I like that answer. All right, he's leaving something for us. All right, that's nice. Let's assume that you do indeed have a company, which you maybe have. And let's say you sell, I don't know, you sell shoes, hats, software. You sell software, I like that. Let's imagine that I pay you $1 million today, but I'm not going to use the software until next year, but I'm giving you the money today. So when you as a company need to prepare your income statement for this year, do you put that revenue this year or do you put it next year? Because you have the money, but you're not going to give me the actual software until next year. So very clear. You don't necessarily have to answer that, but I see you had an answer ready. That was nice. The point is there are some of these weird nuances here in terms of how do these things actually work, and then accounting is really the instrument that allows you to do that. And just to give a tiny, literal, granular example of what it means to record a financial transaction so we understand the next step here, we have the simplest example of Apple selling a MacBook. There are rules they need to adhere to. So here you can see they book a debit and a credit. This is double entry accounting. These things are fairly intuitive, but this is what it literally looks like when you then record a financial transaction. Now, you have your, and I like Stanko positioning, that's good, get some good photos here. Now, in this case, you understand, okay, accounting is about the financial position of a company. That makes sense. What are the rules and regulations I need to adhere by? Because give me those, and then I'll figure it out. That's easy. And then you probably guessed it. Oh, and this is actually a fun tidbit we can maybe return to later. You probably guessed it, that it's GAAP and IFRS. And it's usually US, so American, US GAAP. GAAP is literally just GAAP, generally accepted accounting principles. Accounting framework. IFRS, the same thing. International Financial Reporting Standards, accounting framework. It's two different accounting frameworks to accomplish the same thing, which is just to help you record your financial transactions and prepare your financial statements. There's a funny thing here where US GAAP is, of course, for US companies, and IFRS is for almost literally everybody else. It's adopted by more than 140 countries. So it's a fun classic example of US being like, we're gonna do what we do, and everybody else goes, that's fine, we're just gonna do what we think it makes sense here. Now the next question you probably have is, this is great, but if I'm Apple, I'm a US-based company, I use US GAAP everywhere I am, problem solved. Being a global tax manager is super easy. It's not entirely wrong, actually, because if we zoom out a little bit, and Apple indeed is a US-based company, they follow US GAAP as their lead GAAP, their main GAAP. If Apple sells a computer in Japan, they have a legal entity in Japan called Apple Japan. Because they're a US-based company, that means that the computer they sell in Japan, they have to record that transaction using US GAAP. So everywhere on the planet where Apple operates, they have to follow their lead GAAP, their primary GAAP, which is going to be US GAAP. So now you're going, wow, that's super easy, but you probably see the wrinkle here, right? Which is, well, if Apple Japan is a Japanese entity, then shouldn't you have to follow local Japanese laws and regulations? Doesn't that mean that outside of just doing lead GAAP, which for Apple is US GAAP, you also need to do Japanese GAAP? So you need to record the same transaction in 2 different ways, and then you need to do that for Serbian GAAP and Danish GAAP and Peruvian GAAP and Moroccan GAAP, and this thing goes on. So you need to somehow keep a collection of, and by the way, a collection of financial transactions we just call a ledger. So all of your financial transactions, this is a ledger. So we have to keep a lead ledger and a local ledger every single legal entity where these multinationals operate. If you've ever seen The Simpsons, which I imagine everybody has, I had to throw this in there because it really reminded me of that, but it was this. Absolutely fantastic. I'm seeing further. All right, it's a great meme. The entire point here is there's a lot of complexity in having to keep these double ledgers. And so the next question you maybe have is, all right, that's fine. What if GAAP and IFRS are super similar? Maybe then that's really easy. It's fine, they're different if they overlap in almost everything. So to provide you an example of that, we have a transaction, the exact same financial transaction that's treated in 2 different ways depending on whether or not it's US GAAP and IFRS. And in building out this presentation, I felt like I was using Apple a little bit too much. So I was like, okay, maybe I need to come up with a fictitious company. And believe it or not, I came up with Babel, which feels not the most original, but here we are, so we're going to be rolling with the punches. The transaction we have in question here relates to development costs, which said differently, Babel creates a new AI model, they develop it, they spend $5 million in the current fiscal year to build out this AI model, and they expect it to have a useful life of at least 5 years. So literally the same thing, like you have a computer that has a useful life of hopefully more than just the current year. If you do this using US GAAP, you just expense the entire thing immediately this year. All 5 million are expensed this year. If you do it with IFRS, and again, it's the same transaction, if you do it with IFRS, there are different factors such that we can maybe even say, well, we'll only expense 1 million this year, and then the rest of the cost that we have, we can capitalize that cost, turn it into an intangible asset and amortize it, which really just means this cost should probably be spread out over the useful life of this thing that I have. That makes more sense, right? And again, you're a global tax manager in this position, so if you put on that global tax manager hat, these are the literal entries that you will be making. So before, when we saw the MacBook Pro with a debit and a credit, this is the same thing where you can see the difference in the adjustments that you would have to post to the ERP system. We don't have to go into the specifics of the actual journal entries or how these recordings look, but there's something really funny that happens, which is if you consider then the implications here, it's fundamentally that you have one transaction, you record it in 2 different ways, so you need to find out how to do that dynamically, and then the implications here are when Babel creates their income statement for the current year using US GAAP, they will have a reduced profit of 5 million, so a pretty significant reduction in profitability, and they release that to their shareholders and stakeholders and stuff like this. But with IFRS, it's going to be only a reduction in potentially 1 million, but instead they'll be less profitable in the coming years. The point here is it's one transaction recorded 2 different ways with major implications downstream. All right. I tried to put a bunch of bullets here in terms of what's the challenge, and I could probably have put on at least 20 more bullets, to be honest. There's a bunch of stuff that we can't cover 20 minutes. It's a bit of a trade-off in how you want to handle this. But there's some stuff here, such as, imagine that you figure out a way to identify all potential discrepancies between each of your lead ledger and your local ledger, so lead GAAP and local GAAP. You do that dynamically for all of them, you make the postings. The next step is that that local ledger you produced for Apple Japan has to be audited externally. Somebody from EY or Deloitte or whomever will have to look at all of the numbers, and whenever there's a discrepancy between your lead gap and your local gap, numbers don't match exactly like we see here, they will go, I need you to walk me through exactly why there's a difference. Show me how you got ideally from source system to this number I want to see. So you have to have a full audit trail of literally all of these adjustments you make, the discrepancies that sit between your lead and your local gap. There's a bunch of stuff here. Now, I think this then makes sense to try to turn our attention to how would you go about solving something like this, right? Because again, it's not only a question of if you look on a limited scale, so for Japan, you go, how do you solve that for Japan? But once you do that, you figure out, well, how do I blow this up to all countries that entities such as Apple would operate in? So to do that, I'll actually show you a little bit of a thing here. And this is, of course, a complete demo example. This is dummy data. I think you can even see it's the trial balance of Bappel. And I think, can you see? I think you can see. All right, I think this is okay. Actually, it cuts off a little bit. That's interesting. Withstanding, we'll try to see if we can't get this thing to function, because I think it's enough for us to do more or less what we want. The way that this thing works, if I zoom in a little bit, is you can see each account we have. So in the same way before, we would have a cash account or a revenue account or an expense account. Here we have one row per account. And for these accounts, we can see, I hope you can see here, that we have a lead amount, which is essentially our US GAAP amount. We have a local amount, we have a delta, and then finally we can see here, which is going to be our complete breadwinner, we can see we have an adjustment value. The adjustment value here is going to indicate anything that we made. It's essentially the exact same thing as basically this thing. It's the adjustment we posted. The idea is that any auditor then would be able to look at all of the accounts that exist for Apple Japan. They can see any difference between your lead and your local gap, and then they can see if you made any adjustments. Now we're going to take this a step further, and we're going to say I'm just going to look for a specific account here. And here I can see I have an income and corporation taxes account, and I can see I actually made an adjustment value to this account. Something happened to this, right? And we'll get into how did we actually do this. There's a bunch of stuff underpinning this, but we'll see how do we actually do this. The point then is that you, as taking on a new hat, the auditor hat, would simply click into this guy. And then you could see there was an adjustment that happened here. Specifically, it's something relating to a tax provision calculation. The next step then for the auditor is, I see you made an adjustment, something happened, I want to understand what it is that happened specifically for this account. So what you do, quite simply, and you can see I already put in some mock text here, hopefully. Yeah, you can, perfect. So here I'm just saying, hey, walk me through what this tax provision calculation is about, where can I see it? So it's literally the thing that we just looked at here. Oh. And I can see, there we go. All right, there we go. And I know it cuts off a little bit, so it's actually a little bit difficult to see. But we can see the main parts. We can see that there's something here where we start. You can see we start with adjusted statutory data from a local GAAP for Bappel. There's something with the entertainment expenses. There's something with a P&L calculation. There's a taxable income, direct taxes, etc. So it essentially gives us a full breakdown of the process that it took to get there. The next step then from there is, well, can I actually see it? And here you'll get a little bit of a sneak peek into the actual ETL processes that kind of underpins this, because the next thing that the auditor would love to see, imagine actually, that you could see the actual calculation. Show me what it is that you actually did. I won't demo necessarily what this is, but this is a low-code, no-code ETL tool. It's cloud-based. It's called Less. It's fantastic. If you're in the market for that, then check this thing out. But the base idea is, if I zoom in on some of the descriptions, you can see I have, well, entertainment expenses are tax deductible. There's something with non-deductible interest income / expense, which essentially means that everything that the auditor can ask for this view, for all adjustments, it has access to based on a long series of ETL processes, essentially data models that transform and create all these adjustments dynamically. if I go back to this guy, and I know you can't really see what this thing is, and it's kind of intentionally done in that way, but basically this is just a very classic ETL process for just a single entity, right? So everything that essentially happens all the way up here has nothing to do with an LLM, has nothing to do with the Gen AI capabilities. It's purely a classic ETL process where we connect to source systems, create a data pipeline, feed it into a data warehouse, and we do our transformations from there. The reason why I kind of wanted to show this is because I think it's a cool example of this, and this is the only thing we looked at here for the front-end part. It's an LLM application, which is crazy simple. We just inject everything basically into the context window with a good system prompt, and then we have something that creates value, and then a simple front-end. Really, my point here with this is also just to understand that Gen AI and LLMs are just amazing, and they can offer open up crazy avenues of value creation, but they need to exist inside of an existing infrastructure. The idea of having it stand alone is something that I think is a little bit naive, and probably why we still see the infancy gap with the Venn diagram, that we can't get real value because it needs to fit into an existing structure. I included this as well because basically all I wanted to say here is actually really what this thing says. It's simply just that trying to just shoehorn that AI thing doesn't generally work that fantastically well, but you need to include it as part of an existing structure, and then it opens up for real value that otherwise was very difficult to create. Very, very lastly, just a big picture recap. There's something really interesting that happens when you take a domain and you take the best tech that exists out there and you apply it to that domain, which is exactly what we're doing. I think this is a fantastic way to create real value. And I think, if anything, we're just thankful we get to be in a position where we can do that for our clients. And then the other thing is Gen AI is a puzzle piece. I think this is pretty obvious to all of us, but of course it needs to exist in an already existing structure. And with that, honestly, last part here is, if you have any questions about any of this, there's something here, there's a bunch of stuff that I didn't get to talk to that I would have loved to have done so. Please ping me if you see me in the hallways. We have Hans, who's a global tax master. This guy will answer anything that you have related to that. He's doing a panel discussion at 4:15. Join that to get some cool insights. Otherwise, we have other members of the Kogna team. We have Luca, Xenia, Stanko, Justus. He has sunglasses. He's very difficult to miss. And then we have Luca as well. Please ping them if you see us. Other than that, thank you, really, everybody, for attending. That was awesome. Thank you.
Thank you, Vidak. Thank you.